Did you know you can buy a manufactured home with zero down payment using a USDA loan? And here's the part most people miss. It only works if the home and land meet USDA rules. Today I'm going to break down exactly how USDA manufactured home loans work, who qualifies, and what can stop your deal. If you don't know the rules up front, hi, I'm John Thomas with Primary Residential Mortgage. I help buyers all over the country use USDA loans the right way. I'm telling you this up front. USDA manufactured home loans are one of the most misunderstood programs out there. If you've been told you can't finance a manufactured home, or you need money down, or USDA is only for farms, stay with me because that's not true. Here's the straight answer. USDA home loans can help eligible borrowers finance a new or an existing manufactured home with zero down payment. But the home must be on land you own, and the home must meet USDA and federal construction rules. This program is built for rural and many suburban areas. It's designed for buyers with moderate incomes and can be a strong alternative to FHA because you're not dealing with FHA mortgage insurance or down payment. If you want to see if you qualify, give me a call, 302-703-0727, or apply online. Now let's break it down step by step. What's a USDA manufactured home loan? USDA manufactured home loans are part of the USDA Rural Development Single Family Housing Guaranteed Loan Program. This loan lets qualified borrowers buy or build a manufactured home that is treated as real estate, not personal property. This is a big deal because USDA does not finance personal property. The home has to be permanently attached to land you own or land you're buying with the loan. Manufactured home versus a mobile home. Let's clear up some confusion. A manufactured home is built after June 15th, 1976, and it must meet HUD construction standards, and it can qualify for USDA, FHA, VA, or conventional financing if it meets the rules. A mobile home is built prior to June 15th, 1976, and often treated as personal property, and is typically not eligible for USDA financing. Now, here's another rule you must understand. If the home is on leased land, like many mobile home parks, a USDA mortgage is not allowed. In that situation, you usually need what's called a chattel loan. Chattel loans are a different type of financing. If that's your situation, read my guide on mobile home loans on leased land. USDA guidelines for manufactured home. USDA has strict rules to protect buyers and lenders. Here are the big ones. First, USDA allows zero down payment and financing up to 100%. Second, the home must be classified as real estate. Third, the borrower must own the land. Fourth, the home must be on a permanent foundation. Fifth, the property must be in a USDA-eligible area. And sixth, the home must be your primary residence. And for existing manufactured home, USDA requires the home to be built less than 20 years old. Details matter here. If one rule is missed, your loan can fall apart. USDA rules for new manufactured home. Let's talk about new manufactured homes. USDA applies specific standards here. To qualify, the home must be delivered directly from the manufacturer to the site, not relocated units. It must be at least 400 square feet. It can be a single wide or a multi-wide. It must be installed on a permanent foundation that follows FHA guidelines. It must meet the federal manufactured home construction and safety standard. You need a HUD certification label, and you need a HUD data plate. A structural engineer report is required, and an ALTA 7 endorsement is required on the title. And the builder must certify thermal and energy compliance. This is why many buyers use a USDA one-time closed construction loan. It can roll the land, the home, and the installation into one loan. Rules for existing manufactured homes. The USDA can finance existing manufactured homes if they meet strict standards. Again, the home must be built after June 15th, 1976. It must be in a permanent foundation. The title must be retired where required. It must meet local codes and USDA property requirements. It must be less than 20 years old and never moved. And it must have a HUD certification label, HUD data plate. Not every home qualifies. That's why a property review up front can save you a lot of time. All right, income, credit, and buyer requirements for USDA. First, income. USDA is for low to moderate income households. Income limits are based on the county that the property is located. And USDA counts the income of all adult house members. Next, credit. USDA allows credit scores down to 600. Open collections are not allowed, and payment history matters. The debt to income ratio, the common target is 29% for the housing, 41% for the total. Some flexibility exists for strong income and credit. All right, down payment and closing costs. Here's one of the best parts of USDA. No down payment required. Seller concessions allowed up to 6% of the purchase price. Closing costs may be financed if the home appraises higher than the purchase price. That's unique to USDA. And USDA has a 1% funding fee, and they let you roll the funding fee into the loan. So you can finance 101% of the purchase price. Advantages and disadvantages of USDA. Let's weigh the pros and cons. Advantages: no down payment, competitive interest rates, low monthly mortgage insurance at 0.35% factor. You can finance land and home together, and it's built for affordability. Now the limitations. The home must be in a USDA-eligible area, and you must be under the household income limits. Manufactured home requirements must be met, and it's not available for homes on leased land. Common myths on USDA loans and manufactured homes. Let's clear up some. Myth 1, USDA is only for farms. Reality, no. Rural and suburban areas qualify. Myth, manufactured homes can be financed. Can't be financed. No, manufactured homes can be financed and meet the guidelines. Myth, you need perfect credit. No, USDA looks at the full risk picture and allows down to 600 credit score. All right, what's the step-by-step process to get a USDA loan to buy a manufactured home? 1, verify the property is USDA eligible. 2, review the household income and household size and make sure you're under the limit. 3, confirm the manufactured home meets the rules. 4, structure the loan correctly for the purchase or construction. 5, complete appraisal and foundation certification. 6, close and take possession. Small issues with land, foundation, or title can create big problems late. That's why we review early. All right, how can my team and I help? My team and I review the property requirements up front so you're not guessing. We guide you through the pre-approval, property review, and closing, and we keep the process clean and predictable as much as possible. All right, facts. Can I use a USDA loan to buy a manufactured home? Yes, if it meets USDA and HUD foundation requirements and is permanently attached to the land you own. Can a manufactured home in a park qualify? No, homes on leased land require chattel financing. What credit score do I need? USDA allows down to 600 credit score. Can USDA finance a brand new manufactured home? Yes, it must be factory direct and installed on a permanent foundation. Does USDA have mortgage insurance? Yes, USDA has monthly mortgage insurance, but it has a lower factor of 0.35. USDA manufactured homes are one of the most overlooked paths to affordable homeownership. With the right planning, they can offer zero down, stable payments, and long-term security. If you're thinking about a manufactured home and you want to know if USDA could work for you, don't guess. Give me a call, 302-703-0727, or apply online. My team and I will walk you through everything from pre-approval to getting the keys. Now, if you enjoyed this video, please like and subscribe so you don't miss the next one.